In the previous section, we explored the purpose of title insurance and how it safeguards property owners and lenders from financial loss caused by defects, liens, or claims that existed before a real estate transaction closed. We learned that title insurance companies operate as a key layer of protection in Arizona's real estate system, ensuring ownership rights remain clear and marketable. Building upon that foundation, this section examines the requirements for providing title insurance in Arizona, including licensing, statutory compliance, underwriting standards, and procedural steps that ensure each policy is legitimate, enforceable, and aligned with state law. Regulation and licensing under Arizona law. Arizona takes the regulation of title insurance very seriously because it involves protecting both private ownership rights and the integrity of the state's land record system. Title insurance companies and their agents are regulated under Arizona revised statutes. Title 20, Chapter 20, Article 4, Payshakri R. 20, 1561 through 20, 1592. These statutes outline the requirements for licensing, operation, solvency, and conduct of title insurers and title agents within the state. Oversight and enforcement fall under the jurisdiction of the Arizona Department of Insurance and Financial Institutions, DIFI, which ensures that companies remain financially stable and compliant with ethical and procedural standards. To operate legally in Arizona, a title insurance company must obtain a certificate of authority from DFI, demonstrating that it meets all statutory conditions related to capitalization, reinsurance, and business experience. Additionally, title insurance agents, who act on behalf of title insurers, must be individually licensed by DIFI. Licensing ensures that every person handling title insurance has the necessary competence, knowledge, and financial responsibility to serve the public honestly. For example, before a title company may issue any policy, it must demonstrate that it maintains adequate reserves to pay future claims. These reserves are required by ARS, Paragraph 20, 1570, which ensures the company has sufficient financial capacity to fulfill its obligations. Similarly, under ARS, Paragraph 20 of 1571, insurers are required to maintain detailed records of all transactions for regulatory audits, providing transparency and accountability within the industry. Title examination and commitment process. Before a title insurance policy can be issued, Arizona law requires a complete title examination of public records to determine the legal status of ownership and identify any existing encumbrances, liens, judgments, easements, or defects. This examination is typically conducted by a title agent or abstractor using data from the county recorder's office, assessor's office, and judicial records. Once the search is complete, the title insurer prepares a commitment for title insurance, also known as a preliminary title report. This document outlines the current ownership of the property, describes the legal boundaries, lists any exceptions or encumbrances that must be cleared before issuance, and identifies the requirements to be met before the policy takes effect. The buyer, seller, lender, and escrow officer all review this commitment before closing to ensure accuracy and awareness of any title conditions. For example, if the title search reveals a tax lien, unpaid HOA assessments, or a judgment against the seller, those issues must be resolved before the insurer can issue a clean policy. The escrow company, in coordination with the title insurer, will ensure that these debts are paid from closing proceeds or otherwise released before the deed is recorded. This process not only protects the buyer and lender, but also fulfills the insurer's legal obligation to verify title accuracy. Underwriting standards and rate approval. Arizona title. Insurance providers must adhere to strict underwriting guidelines and rate filing requirements. All premium rates, fees, and endorsements must be filed with and approved by DIFI before being used in the state. Under ARS, Paragraph 20-383, insurers cannot charge rates that are excessive, inadequate, or unfairly discriminatory. This ensures that consumers receive fair pricing and that competition among title companies remains ethical and transparent. Title insurers also follow national underwriting standards established by organizations such as the American Land Title Association, ALTA. These standards govern how title searches are performed, how defects are disclosed, and how coverage is defined within policy forms. For instance, an ALTA standard owner's policy or lender's policy outlines the scope of coverage, exclusions, and conditions under which the insurer will defend or compensate the insured. In Arizona, most title insurers use ALTA-approved forms that are customized to meet state law requirements. Escrow and recordation coordination. The issuance of title insurance in Arizona is inseparable from the escrow and recordation process. Title policies are typically issued only after closing and recordation to ensure that the new owner's rights have been legally established. Escrow officers verify that all documents are properly executed. The deed is recorded with the county recorder's office, and that all prior liens and encumbrances have been released or satisfied. Only then does the title insurer issue the owner's and lender's policies, confirming that the insured parties now have clear and enforceable title. A practical example illustrates how these steps interact. Suppose a buyer in Pima County purchases a property through an escrow company. Before closing, the title insurer conducts a record search and discovers an old mechanic's lien that was never released. Escrow cannot close the transaction until that lien is cleared. Once it is paid and released, the escrow officer records the new deed and instructs the title company to issue the policies. This process demonstrates how statutory compliance, risk management, and fiduciary duties combine to protect all parties and ensure legal transfer of ownership. Fiduciary and ethical obligations. Title insurance providers and agents owe fiduciary duties to act in good faith and provide full disclosure of known risks. According to ARS Paragraph 20-1567, insurers and agents are prohibited from concealing known defects, falsifying records, or issuing coverage without adequate examination. Violations can lead to license suspension, revocation, or civil penalties. Furthermore, Commissioner's Rule R4-28-1101 reinforces that real estate licensees working with title and escrow professionals must always act honestly, disclose all material facts, and avoid misrepresentations that could harm the client or compromise the transaction. Arizona case law, particularly Burkons v. Ticor, Title Insurance Commerce of California, 1991, emphasized that title insurers must act with honesty and care when examining and issuing policies. The Arizona Supreme Court held that even though title insurers are not advocates for either party, they are liable for damages if they negligently fail to identify known defects or fail to disclose conditions that would have been discovered through due diligence. This case underscores the dual responsibility of title insurers to accurately report the condition of title and to indemnify the insured in the event of loss. Discussion. Why does Arizona require title insurers and agents to be licensed? Answer. Licensing ensures that only qualified, financially stable, and ethically responsible professionals handle title insurance transactions, protecting consumers and maintaining trust in the state's property record system. What is the purpose of the title commitment in the title insurance process? Answer. The title commitment discloses ownership, legal descriptions, and existing encumbrances, identifying the requirements to be cleared before a final policy can be issued. Why must title insurance premiums and fees be approved by the state before use? Answer. To ensure that rates are fair, non-discriminatory, and in compliance with consumer protection laws, maintaining transparency and market integrity. Review summary. Providing title insurance in Arizona requires adherence to a rigorous statutory framework that ensures accuracy, fairness, and consumer protection. Title insurers and agents must be licensed and financially stable under the oversight of the Arizona Department of Insurance and Financial Institutions, DIFI. Before a policy is issued, a complete examination of public records must be performed, resulting in a title commitment that identifies ownership and encumbrances. The insurer must resolve or disclose all defects before closing, and only after recordation can the owner's and lender's policies be issued. Arizona law also mandates that rates and underwriting standards be filed and approved by DIFI, ensuring consistency and fairness across the industry. Through this regulatory structure and judicial reinforcement in cases such as Burcon's vs. Ticor Title, Arizona upholds one of the strongest systems in the nation for protecting property ownership rights and maintaining confidence in the real estate market.